Hey traders, this is Christian Fromhertz, CEO of Tribeca Trade Group with your midday trade idea. So I haven't shot a video for a trade idea since last week. This was on the 15th where we went long JD.com. We bought the September 46 call spread for $1.30, $1.33. And I took a target today at 270, so better than a double. So this was the last trade idea video that we put out last week. You may have already watched that. Hope you participated in this trade, but a double so far. And I'm still in this trade. I just took a target today to take some of the position off for better than a double in just about a week's time. So really nice trade that we talked about last week. Today, I want to talk about a way that you can play the ETF growth market. And we saw a nice trade today in SPGI. So what is SPGI? They're very similar to MSCI, which you may have heard of. They actually develop the indices, and they're the benchmark indices for many of the ETFs that are out there. So how do they make money? They make money from licensing fees. So when ETF assets grow, the ETF providers, the BlackRock, State Street, Wisdom Tree of the world, if their indices are State Street, Spiders, who manage Spiders, if their ETF assets grow, they make more money by management fees, and they have to pay licensing fees to the underlying benchmark provider of the indexes. So that's MSCI, that's S&P Global or S&P Dow Jones indices. And so one way that you can play this growth is by getting long SPGI. So what did we see today? What caught my interest today in this particular name? Which sometimes it's option activity that kind of opens up my eyes to names, and I'll find a trade idea through those means. So somebody went ahead today and they bought 2,500 of the SPGI August 150 calls at 217. This is an opening trade. These were swept, so pretty aggressive looking trade. This is a lot of premium in my opinion. So what I do a lot of the times is I look for these trades on the tape, but I don't always necessarily take exactly the trade that's on the tape. Sometimes I customize it into the trade that really looks attractive to me. So what did I do? I took what they did with the 150 calls and I made it into a call spread. I thought it was this trade is a little bit more affordable when you turn it into a call spread. So I bought the 150 calls in August and I sold the 155 calls for a cost of 155. So what's the total that I can make on this trade? The width of the width of the spread, which is $5 minus the $1.55. So the most I can make on this is $3.45. So that's what I'm looking for, and that's net, by the way. So I'm looking for this thing to kind of go through the upper strike of 155 in the next month. So if we look at the chart, it's one of these names that's been in a really, really healthy trend, and it's got a slight dip. I don't know if we're going to get a dip all the way to the 50-day moving average. If it dips further, I'll probably look to add to this position. But if you overlay this with some shorter moving averages, such as the 20-day moving average, which I look at quite a bit, you can see on the daily chart that's exactly where this thing has found some support. Notice the last time, it's a little bit different picture. The last time this thing hit the 50-day moving average, the 20-day was also there as well. So I'm using the 20-day moving average as support, and I like the nice turn after a couple days of sell-off here. So I would call it maybe a mini dip. Notice on the RSI that this thing was pretty overbought. So it's no longer overbought, and it seems also in the RSI in the past really hasn't gotten to oversold, which I view as a positive. So I like the option activity. I use the option activity to get involved in the trade, and I think a great way to get involved in the ETF market, which continues to grow. So what a nice play on the ETF market. So I'm long the SPGI August 155 call spread at cost of $1.55. Thanks for watching the video. Have a great day.